Virtually every time someone criticizes the show in print, on air, on the web, they love to describe me as a hack who's hazardous to your health and wealth. A tout with a terrible track record, recommends stocks that go lower, tells you to sell the winners. Guy's wrong much more often than he's right. I read the web. I don't even mind the criticism, except for the fact that I think it's wrong and misleading, but that's just my view. On a personal level, I say meaner, more negative and nasty things about myself every single day than anything anyone could ever imagine, as my self-hatred, of course, is limitless. But I do know stocks, and the attacks on the show's record have always seemed a little bit off to me. Even when someone gins up a study that purports to measure the performance of every stock I mention on the show in order to get some attention or discredit me. Now there's an academic study showing just the opposite. It's the first study that actually measures something close to performance, not just the so-called Cramer effect, or how much stocks jump. And frankly, it's embarrassingly positive. And I'm appreciative of the work of the professors who attempted to assess in a serious fashion the show's numerous picks and pans. I think there's a ton of caveats here. As I have said over and over again, I don't think there's a real easy way, if there's a way at all, to measure what we do on the show. We have explained over and over how difficult it is to measure the performance of a TV host who tells people his opinions, rather than someone who actually runs a portfolio that can be easily measured or benchmarked. And frankly, I still have yet to see a methodology that adequately reflects the advice I give, waiting until the stock comes down and, holding it until an event occurs, or repeating the same recommendation over and over. I think it's impossible to quantify. I've explained that the primary focus of the show is educational. It's something I try to work in or tell you every night. My goal is to share in an entertaining way, and I make that point, entertaining. The insights I've accumulated in my years as a broker at Goldman Sachs, a hedge fund manager, and a stock junkie. This is a show about helping you become a better investor. You're going to invest anyway. You're a self-directed investor. I'm just trying to make you a better self-directed investor, okay? Better client. There's no way to measure that kind of education with a number. There's no index for that. That's not the intent of the show, despite endless attempts by others to shoehorn performance into the education, entertainment, fun, and news mix, okay? But we now have an independent study that takes a serious stab at it, despite all the flaws I've just described in trying to analyzing the show. Two guys trying to write a record of what I've done. Insofar as it can be measured, and the record, according to these professors, well, they say it's actually good. And their work asserts that I am not as crazy as I look, or at least crazy in a kind of Fox-like fashion. Studies done by two professors at Northeastern, Paul Bolster and Emery Trahan, I don't know them, and it's called Investing in Mad Money, Price and Style Effects. It's set to be published soon in an academic journal called the Financial Services Review. It shows, among other things, that my performance between July 25th of 2005, right after the show started, to December 31st of 2007 was, well, excellent. Let me just quote it. The cumulative return for this portfolio for the entire period is 31.75%. That's an annualized return of 12.09%. During that same period, the S&P 500 earned 18.72% cumulative, or 7.35% annualized over the same period. How about the Russell 1000? That earned 24.54%, 9.51% annualized, and 24.77 and 9.59 for respectively. The Russell 2000 growth and value indices earned 22.51%, 8.76% annualized, and 9.39%. That's 3.78% annual. Well, look. Basically what I'm saying is, on every one of these, the Russell, the S&P, I'm trying to give you exact because I don't want to cuff this and I don't want people to think I made it up. But I beat every one of those benchmarks, according to the professors, according to them. Now, their methodology I didn't think was perfect. Again, because it would really be impossible to measure. But certainly better than most of the attempts that I've seen. Again, I don't run a portfolio Mad Money. I do run Charitable Trust, ActionAlertsPlus.com, which you can track, and that's consistently beaten the S&P 500. I just want to point out that the next time some reporter or some magazine or newspaper says my stock picks are bad, the next time some blogger says all I do is lose money, remember that there actually is an academic study out there that does hold the opposite as true. Even as, again, to me, it is too difficult to really track. They tried it, and if it were awful, I'd have to acknowledge that too, but it isn't. Look, here's the bottom line. I've said over and over and over again, the show doesn't lend itself to this kind of analysis. Others have tried to assess the effect of the show on stocks. This is a serious attempt at examining how I've done, and it sure seems better, well, how about this? Better than a sharp stick in the eye. Stay with Cramer.